So we've got some great CEOs on this panel who are going to share their perspectives on a number of things, including how their organizations have coped with the challenges brought on by COVID and the complicated work environment that's created. I think how COVID has changed some of them as leaders and the tools and techniques that they're now deploying to lean into the opportunity of 2021. So we're really hoping this will leave you with some tangible ideas that you can action in your own companies. I think in order to create some context to get started, I'd like everyone just to quickly give a little bit of background on their company, just kind of size, stage, perspective, and importantly, kind of how COVID impacted this year, and then we'll get into some of the other topics. Dev, why don't we kick off with you? We'll just go alphabetically.
Great. Thanks, Mark, and thanks, Greg, again for hosting this. Dev Ganesan, CEO at PathFactory. We use data signals and AI to do better content engagement and drive better results on your pipeline and demand generation, and hopefully you have some bigger revenues. So the company is, less than 100 employees. Originally was based out of Toronto. Since COVID, it changed. We are pretty much 100% remote, and we are, Series B, growing nicely and looking towards raising some more capital. But the key thing is, in all this COVID issues, the company's value proposition is from front and center. So happy to be here and discuss more.
Eric?
I'm co-founder, CEO of TripleLift. TripleLift is a consumer-centric advertising technology company. We'll end the year at around 330 people, headquartered in New York, growing about 50% annually.
Milind?
Hi, everybody. Milind, Mehere, founder and CEO of YieldStreet. YieldStreet, as the name suggests, helps you generate yield. So if you want to make money, please sign up on YieldStreet. We are an online alternative investment platform focused on income generation. And the biggest differentiator is that we provide access to kind of non-correlated, non-volatile, non-equity based investment options that previously were not available to 99% of the population. We have essentially funded more than $1.5 billion to the platform over the last 4 years. And less than 100 people headquartered in New York City. Excited to be here.
Tim?
Yep. Good morning, everybody. Tim Kopp. I'm with Terminus. We work in account-based marketing, which means we're helping companies move from this lead-based orientation of the world to an account-based one, and we help sales and marketing teams work together better. We'll finish this year just north of a $40 million annualized run rate and about 200 people.
All right, thanks, guys. So, look, chaos, it's often been said, breeds great opportunities, and I'd be curious to understand a little bit about whether 2020 has forced a reset in your go-forward strategy, or even in your approach to kind of strategy ideation and execution. Eric, you had a great quote in one of the Lighthouse series where you talked about creating a company-wide team-based strategy competition where people could submit ideas. Can you talk us through a little bit of that, and then for the rest of you, weigh in a little bit in terms of how you have looked at kind of COVID as a lean-in opportunity for your companies?
Yeah, a lot of people say the best ideas come from anywhere in a company, and I think that's true in the abstract, but you sort of have to create the situation for it to be possible. And so there's a few things that we've done to really to nurture that. One is we focus a lot on education in terms of industry education, what people do in the industry, generally with as unbiased a view as possible. And that includes a weekly set of emails to the company with like general news and industry updates, really robust wiki, things like that, so that people are informed enough to be able to make good submissions to things like the strategy competition. And our strategy competition generally is something that, the prompts are given COVID, what would be an interesting new area for the company to invest in? C-suite or subset grades it anonymously, winner gets whatever. And we we consider it for the product roadmap. We don't make a guarantee that we're going to do it, but we do make a guarantee that it will be considered as one of the things that we might do. And we end up doing about a quarter of the things that we that are winners. We had hundreds of entries this year, so it was a really great experience.
Is this a strategy that you're going to continue with, do you think, at whatever level going forward?
We've done it for years. And so one of the things that we like about it is that even if we don't like the submissions, which I would say 2/3 of them we don't, or they're just like things we're already doing, it gets people really involved in company strategy and thoughtful about it. And I think it creates a lot more engagement. And so I think there's positive externalities beyond simply the strategies that are submitted. So it's something we're definitely going to keep doing.
Mark, if I may jump in, I think we found a very interesting and related way to engage the team, which is to do a hackathon. And being remote, we were amazed at how successful it was. The only criteria of a hackathon was that you have to involve 2 other teams, and it cannot just be a product and engineering effort. And we literally had 12 teams present, and we have implemented almost 40% of the features. And it became such a huge kind of exciting moment to actually leading up to the hackathon and the presentation and the award ceremony that we did this back in end of May, that we are doing again to end the year with it around December 22nd. So to Eric's point, I think for the team to feel involved and to have more control over features that would generally maybe not get prioritized, or ability to actually show a demonstrable product was really exciting. And to get the business teams involved outside of tech and product was really a fantastic way to rally the team together.
Yeah, this actually evolved out of the notion of a hackathon where we were just like, how do we make it so it's not just R&D? And I like the implementation too.
Tim, Dev, any thoughts you want to add?
It's we were paralyzed at first, not paralyzed. I do think just pause, like what's going on? Is this going to be good? Is it going to be bad? I think it's turned out to be both. Mostly we found opportunity to be opportunistic. We've done 2 more acquisitions this year. So we found a chance. There's some other kind of stalled out assets. We found kind of scaled assets. It's more what our customers want. So we've been very aggressive there. And then, in our space, we're generally selling into marketers and a marketing budget. Events are gone and they need to replace it with something. And so we've been kind of adjusted our messaging and positioning to be more in that vein. At the same time, also realizing we had a pretty robust ADR function. And while people are more accessible than ever, I'm not highly appreciative of cold calls right now. And most of you probably aren't either. So we've had to find ways to really adopt a helping is the new selling kind of mindset, less aggressive, more providing tools and resources and thought processes, and getting more of our CEOs together to kind of connect and share best practices. So more of a helping is the selling kind of mindset.
The only thing I can add there is we see this COVID as almost become a focus point for positive things for the company. It brought our product much more focus to the client, and actually brought also much more focus for the company, saying what are the products we're going to go forward with, and brought a sense of urgency, which I would say that we lack. We are going in a couple of different directions because there are so many opportunities. This brought a lot of focus to the organization, and so we are seeing a lot of positive things. And success breeds success. When you turn from burning cash to turning positive, right? Employees jump into the success train, and people are very positive. And so I think we are taking advantage of the situation, it's a tough situation, and turning that into something that's positive. And we can talk a little bit more.
Lacey, we had a poll up at the beginning in terms of what the rest of the team here has been looking at in terms of opportunity for 2021. I don't see the results up yet. Can you display them for us? And while she's doing that, let's talk a little bit about structuring and organizing your thinking about 21. Obviously, we're now well into our annual operating planning and budgeting period. We still are in a relatively high level of entropy, I think, both in North America and the rest of the world. So it's probably causing, a little bit of complexity in the way you think about 21, and in particular, how you think about things like bonus compensation going into 21. Would love you to kind of talk us through how you're thinking about the 21 plan. Are you making it more granular? Are you looking more short term? And how are you thinking about bonus comp as you move into what's going to be, no doubt a higher level of entropy even for the first, 2 quarters of the year? Tim, anyone?
Sure. So we think about it now as an annual framework, but adjusted quarterly. So I don't think there is such thing as an annual plan, or if there is, tell me how you guys figure out how to do it. This kind of builds on yesterday. So we're doing our manager comp through the comp committee quarterly as well. And it's based on the 2 top objectives in the company. So it tends to be bookings and retention. And then we have a third one, which is more around personal kind of OKRs. And then we found it more critical than ever to align everybody to the same incentive comp, kind of from top to bottom. So everybody's sort of shooting toward the same thing. So we have a very tight annual planning framework, but adjusted quarterly. So what that means is in our ELT meeting every week, we're actually going through the new stacked rank prioritization of headcount. So even though there might be 12 headcount open, it's subject to reprioritization and kind of reshifting, rejiggering every week based on what are the needs. So annual framework, quarterly on comp, weekly readjustment is a team.
Dev, I think you had some thoughts earlier in one of our conversations about how you're trying to structure your bonus compensation going into 21 because of the large amount of uncertainty. Can you walk us through that a little bit?
Right. Again, going back to what Tim said, we are also looking at it from a very quarterly basis. We have a plan. We have a plan A and a plan B. We basically go with a plan A, which is very measured, very conservative cash investments, where we can achieve a base growth. For us, staying cash positive, EBITDA positive has become important. So we basically are focusing on that. And then we also have a plan B. So as we see some results that exceed our plan A, I'm ready to invest in extra AEs, invest in a couple of more BDRs and whatnot to exceed the numbers. And our budgets now and bonus plans across the board for everybody is on a quarterly basis because things are so uncertain. So no point in having a goal year where things are going to change pretty fast. And so we reward across the company on a quarterly basis and celebrate the success of exceeding the number. And that has worked pretty well in Q2, Q3. And we are heading towards Q4 into, again, a very successful quarter. So I think that has worked very well for us.
Annual operating planning process on the board obviously is an iterative event. Sometimes it's easier, sometimes it's more difficult. With all of the entropy that you have going into 21, are you increasing the amount of time you're spending with your board up front? We had some really great ideas yesterday about being more proactive pre the official board meeting that covers the annual operating plan, sensitizing the board to the plan as it's evolving and so on. Really curious about how you guys are kind of managing, aligning, and leveraging your board in what is obviously pretty turbulent times. Anyone feel free to jump in first.
Mark, my point of view on this, there's no time for some great unveiling of things. So there's no point in going away as a management team and cooking up something and then surprising your board at the board meeting. So for us and with Edison and with Ryan in particular with us, it's been like weekly, if not daily, sometimes kind of calibration. We're thinking this, and if we did this, we would do that. And so by the time we get to the board meeting, I think the approval of the plan will be extremely anticlimactic. I mean, it's basically done. So it's lots of choppy little pieces, and then it's just constant, frequent texting and getting update and input and doing that across the board. And it's been great because it's brought our board kind of closer into the business, and that doesn't feel like some giant event kind of going into the board meeting itself.
Yeah, Mark, if I may jump in, I think for us as a company, as COVID hit in Q2, we actually cut over to something called an austere AOP, and we were readjusting that AOP in the last couple of quarters. So for us, it was a natural transition into the annual operating plan for 21. Obviously, you always want it to be accelerated faster than you really can. But what we tried to do is, from a sales perspective, really do bottoms-up planning, and then from a user growth perspective, really figure out how do we get more users effectively, in terms of where we are going to spend our dollars. And that is currently a process that's ongoing. And we involved the board actually quite heavily throughout this process over the last 6 months or so. But for 21, we gave them a sneak peek, and now we are working with them much more closely. So Chris and Jennifer from the Edison side, and hope to wrap that up by kind of mid-December. That would give us a really granular view on 2021. And I think it is important next year to really measure all of your metrics. So going back to the bonus conversation, one of the emphasis that we are going to have for 21 is profitability by kind of product category. So we kind of create these investment products that different parts of our sales/investment team bring to market. And our focus is going to be which of those products become profitable and when they become profitable. So that's on top of all of your standard metrics for operating the business. Profitability aspect is going to be a key component for the bonus pool.
Makes sense. So Lacey's put up some of the poll results so far on the screen, if you guys can see them. It's certainly very encouraging to see, the Edison portfolio lean into 2021. If you look at the votes, you're clearly looking at new opportunities to accelerate pivots and so on. And of course, a key part of this is raising capital. So Milind, you talked about profitability being important. A lot of us are at various different stages of our companies. But it's clear that in order to power transformation and to power new business, we're going to need to raise capital. So be curious for you guys to talk a little bit about the fuel for that future growth, and how many of you are looking to raise capital in 21, and how are you thinking about 21 in those terms, because it's not a trivial time, obviously, to be adding additional capital given all of the uncertainty in the world. Tim, I don't know, do you want to kick that off?
Sure. I mean, kind of stating the obvious, but it's something that takes a while to figure out. It's a lot easier to raise money when you don't need it. And so I think taking control of your own destiny, I think is more important than ever before. So we've put ourselves in a place that we don't need to raise money next year. And when you don't need to raise, it allows you to kind of do that out of a position of strength. That's good for your current investors and for the company. We'll use debt in a little bit more of a creative way. But what we've really done is focused on predictability and consistency of the metrics, which then gives the management team more confidence. So we're really just zeroed in on the leading indicators of the business, probably more the lagging indicators, which sometimes investors aren't. We will lean into fundraising, but very opportunistically. So we put ourselves, the theme that we use as an ELT is just controlling our own destiny. So we would like to raise capital. If we do it, it'll be out of a position of strength and execution, but not putting ourselves in a position where we have to do so defensively.
Eric, Milind, Dev?
Yes, on the YieldStreet side, we are actually going to raise our Series C round in early 21. And actually, as you might have imagined, there is a lot of dollars, just venture growth dollars out there. And so the question really is that, Tim, I agree with you. I think how do you get the VCs and the growth investors excited? And for that, what we have done is we generally have kept a lot of funds and investors warm. And I think I would recommend that, if you guys are not actively doing that after your last fundraising cycle, you should absolutely do that. Because of that, we have got a lot of inbounds over the last couple of quarters because we kind of kept them abreast. I send out a yearly summary to a wide group of investors. And then this year we have sent them like a 6-month summary as well and had multiple different calls. So I think that really helps you. The question also is, there is a lot of, depending upon the stage of your company, SPACs obviously have become the new kind of buzzword in the last, I would say, 2 quarters, and really kind of have gotten a lot of positive momentum. So again, if you are in that stage where you think that you could be SPAC ready in the next 12 to 24 months, how do you want to combine your fundraising with getting prepared for SPAC, which is something that we are thinking at YieldStreet. And so potentially for this round, traditionally we might not have hired a banker, but I'm considering hiring a banker because we feel that developing that relationship over the next 12 to 24 months would be very beneficial for the company.
Do you think raising money will take longer in 21 than it has historically?
I think that really depends on the size of the round and the nature of your business. I think, in my opinion, if you have a strong business, again, depending upon the size of the round, it may take the same time or maybe slightly more, but I don't think time should really be a factor.
Mark, let me add one thing. We are also looking at raising money maybe in the second half, but I think one thing we tried a little bit this year, and what we found is that we are not ready with all the metrics, right? My churn is not exactly where it should be. And the sense I'm getting talking to a lot of VCs is there's a lot of money in the sidelines and you can get a good valuation, but they're also much more diligent in terms of due diligence and the metrics. They're looking for certain growth rate, certain gross profit margin, certain retention, and all those are very critical. So we are not at there. So we are working on 1 or 2 of the metrics where we think we'll be extremely well positioned in the second half of next year. So when people are looking at raising money, make sure that you look at all the metrics. You're going to get a lot of buzzwords in the market saying, hey, we're going to do it. You end up wasting your time.
Yeah. So for us, I think our situation is less like generally applicable, but we have, so like Milind, I've kept a lot of large growth equity and private equity funds warm. I have a quarterly friends and family type email that's just me bragging to like with the guise of calling it something else. Basically what happened is we have had a strategic inbound that sort of happened really Q3 of this year. And we've parlayed that into more or less an official fundraise process that we can say, oh, well, the board kind of has instructed us to consider all of our options, and now we have to do it aligned with the timing of this particular strategic. So we have to start, there's some BS that goes into this conversation, but like we have to start Jan 4th, and we're going to be trying to align it with the timeline of our strategic, who we can't control, blah, blah, blah. And so for that, we are, and this is a bigger process. So we are including, growth equity, strategics, private equity, and SPACs. And we are using a bank because it's to get that. And we found that, based on this situation for our company, I can't say that, like, we haven't actually, there's no money in the bank from this yet, but the interest is palpable. And it does seem like folks have, want to deploy money. And that, they probably haven't deployed as much through the sort of tougher earlier part of the year, especially the kind of larger growth equity funds, who I think earlier in the, and private equity funds who earlier in the year may have been a little more reluctant. So that's our situation.
There's a question here about who owns the kind of corp dev efforts for you guys. Obviously, many of you have varying sizes of companies, but who is leading that effort internally when you are active? Milind, you've got a major Series C coming up. You're obviously having a lot of personal outreach. Eric, you've also been doing a lot of outreach. Who holds the ball internally for the kind of meat and potatoes of that process?
I think at our stage, we don't really have a formal corp dev function. So we've made a couple of acquisitions, and that's mostly been led by me and my co-founder with the help of our chief product officer and our head of finance. But I think it really depends on your stage. I think at a stage where you are constantly, evaluating businesses and like looking at complementary businesses to grow, a strong CFO, slash your product head or a capital markets function person would really be very valuable in the process.
Have any of you guys looked at different kinds of structures, venture debt or debt to power the business, or is it's fairly traditional equity you're looking at this stage?
Yeah, we're looking at all the options. The comments that all of you made earlier resonate. I actually find the amount of capital right now that's out there is a little paralyzing. There's just so many different types. There's so many different creative structures from. And everybody wants a look. It seems like everybody wants optionality. So they won't call your baby ugly early enough. So they would be very happy for you to spend a full-time job doing nothing but, and I could spend a full-time job doing nothing but answering inbound right now. So I do think more firms will end up engaging a bank because of SPAC, because of the amount of M&A interest, because of just how fluid everything is. What would have been a tight linear process where you'd say, we're going to start on this date, end on this date, and run 6 firms through it. That's sort of, there's just so many more options. And I think debt is so cheap. And if you've got good predictability in your business, I think it's a really viable option that helps keep a lot more optionality in your business for longer. So I think more people will use debt because the terms are so favorable.
All right, so leadership is key, obviously, because this is a team sport that we are all engaged in, and getting our companies forward through, I think what's been a very complex year has probably challenged us all as leaders in various ways. We've talked about, being more authentic and human, and kind of leading with increased transparency, driving a sense of urgency and volatility. All of these things are happening at the same time. Can we talk a little bit about how 2020 has changed your style of leadership and forced you to grow as leaders at all? I think it's been an interesting topic over yesterday that I'd love to kind of drill down a little bit on. Anyone can jump in.
Yeah, what I would share is I didn't realize some of the crutches I'd put in place. They're just sort of learned behaviors. And one of mine was management by walking around. And it's just the feeling in the hallway, the vibe, the what's happening, quick sharing of context. It's really important to do that with millennials who want that rubbing shoulder time. But all of a sudden that tool has kind of gone from my toolbox, which has been hard. And a Slack conversation's just not the same. So from a leadership standpoint, that's probably been the toughest one, figuring out how to, I think we've all got the all hands down and the happy hours and those kind of things, but how do you just check with people in what would have been kind of 3 or 5 minute sessions, not 20-minute ones. So I'm finding more time to just reach out to my list of top folks and just quick phone calls, just getting the hell off of video and Slack and all the things that we're beat up on, get on the phone, just talk for a couple minutes and let people go. And then have them share back to me has probably been the most critical. But back to yesterday, and I think what really resonated is we all need to be more transparent and authentic than before. Balancing that with confidence by far has been the biggest thing that stretched me. How do you be extremely transparent, authentic, empathetic to everything that's happening, while also leading with confidence? That's probably been the toughest piece that's stretched me as a leader.
Dev?
I made a good point. What we basically bring all the things people have talked about. I mean, being transparent and focusing on organization with a key objective, right? And when there is a situation, actually, it gives us an opportunity to get the organization focused, right? Our focus is, hey, at the beginning of the COVID, we were burning $1.5 million cash per quarter, leaving the door. End of the quarter, we turned break even. So, and couldn't have done without all employees coming together, right? We released a new product that was conceived post-COVID on a virtual summit, and we delivered in 3 months at working with a large client. So these things actually bring the team together. So I call this intelligent speed. And the culture is something we focus a lot on saying the culture is winning culture, right? Let's all come up with a great product during COVID. Let us survive, do well during COVID, whereas a lot of companies are not doing as well. That itself has become a strong motivation from employees as to keep them, because COVID has been very stressful, believe me, for all of us, right? On the business side, on the personal side. So I think one of the things also benefited Tim and I, for example, we chat on a regular basis, right? You don't want to be sitting isolated. So we reach out to a lot of CEOs in this Edison network, for example, right? We call Kelly and saying, hey, what others doing, right, in this situation? Are everybody cutting costs? Everybody basically going remote? So you're not sitting there making decisions in isolation. Leverage the network, and you need to be on top of these things, and it has worked pretty well.
Have you found us? Go ahead.
I was just going to say, I think for me specifically, I think leadership characteristics that I really had to lean in this year was empathy and patience. And YieldStreet, to Tim's point, right, was a very face-to-face culture, especially in our headquarters here in New York. And we would pride ourselves in coming to the office and water cooler conversations and lunch table conversations. And how do you kind of suddenly go and support the team that needs your support, especially in a challenging time? For us, Q2, we deliberately decided to slow down given the nature of our business, which is high yield alternatives and credit business. And how do you kind of communicate effectively and be presence for your team? And then on top of that, I think it was very important for us to maniacally prioritize what are the projects and really rally the team to do that. So transparency, obviously, we were a pretty transparent company. We send a very detailed monthly email as well as a quarterly hands-on meeting, but we had to change that style to even be more frequently in touch with our employee base. And I think to be empathetic and be patient in really understanding what they're going through, but yet, translate that to making sure that the projects are prioritized properly so that they're effectively delivering with a smaller, more focused team. What I think, really valuable, for me, where, we were always in like go mode. To take that step back and be patient was something which was very helpful for me as a leader.
So one other thing for me is we've had this opportunity, I think, to really reconsider what the company culture means and people's relationships to it. And from an empathy perspective, I think, historically, I and maybe many leaders have kind of taken like this is what company culture is kind of perspective. Like when you join a company, like you join the company culture and you're part of it and you're part of the office experience, and that all happens to you and you embrace it. But now there's two things. One is there's a lot of people that are joining that have never met almost anybody or actually anybody in person. We don't even have an office anymore. So there's no office to go to, has never met anyone at the company. There's no concept of company culture to those people. And for existing people, their relationship to the company now is on their terms. And so like it's they sit at the computer and they make the decision about what to do and how to interact with the company. And so we've had to really invert the relationship around how can, and this is like a pure empathy question, which is like, how can we set up the company and the experience and the things we provide and how we interact with the people at TripleLift in a way that, one, what even is company culture now if there's no office and it's not the same thing. And so starting to think really coherently about what does culture mean and how do we lean into that, and two, taking a less prescriptive view of what culture means and getting more input. And so that means asking our employees and our peers and the like, what does culture mean? What do people want now? Because they don't want the same thing. And how do we deliver on that? And for me, not everything has been what I expected. So for example, somebody said, oh, learning and development is going to be a big deal for people. I was like, nobody really cares about that. They're not like sitting at their computer and on a Tuesday afternoon being like, I need to do learning and development. That's going to change my relationship with the company. But I was wrong. And so we've invested in a few L&D initiatives, and I think it's been very positive. And so that, like, it's a small example, but I think, you know, just completely inverting the relationship that you have with your employees and with culture has been good for us.
So we're in the last kind of minute or so of our session. It's a great segue, actually, because we're going to be talking to some chief people officers about how to build culture in a time like this. But any parting thoughts for your peers? You know, I think, Eric, you bring up a really good point. Managing this kind of culture and this glue and so on is very difficult. You know, Dev's talked about a shared mission and the importance of that and kind of getting people to rally forward. I think that's very important. But how do you guys kind of, what are you doing day to day to kind of reinforce your culture, to build connectivity and that common sense of teamwork when you guys can't see each other every day?
Mark.
So maybe Mark, I can get us started. I think here are 3 or 4 things that we have found super useful. So we actually did a leadership learning session series. So everybody in the leadership team just picked a topic, from hiring great teams to creating your startup page to creating revenue metrics, things like that, just to kind of train the team. We did that. We have done, you know, a props channel on Slack that has been super popular. We are doing Jitter Buddies on Slack, which is you check in with a team member. Then for social hours, we are doing Jeopardies, two truths and a lie, and that is creating a lot of engagement. A lot of these things are very straightforward and simple, but we found that the staff is reacting really positively because a lot of them are zoomed out with back-to-back meetings and working really hard. And these things are breaking up momentum. We also had Eden Health, which is one of our healthcare providers. They actually did a kind of psychological sessions for people with families and for singles, how to cope up in COVID environment. So we're doing simple things that are not very expensive, but at the same time, really bringing the team together.
The point I was making there is one thing we did differently, which has worked very well for us, is we as a company said we're going to stay close to the customer. So that has been unprecedented reach out to the customers at all levels, right? Not a day goes by where I'm not talking to the C-level at IBMs and Cisco's and whatnot, and that goes on across all levels of organization, even to my CSMs and support. What this has done is it has helped everybody, even a large company like IBM, they're all human beings. They're having the same issues of COVID, relocation, work to remotely, right? All of those things are real issues. They are having churn issues. They are having challenges, losing customers, and helps us also to focus better. So that's one success where my team, Helen, and they have done a fantastic job, is deep down at all levels. And we have got more access to clients, and we're closing more deals and bigger deals than ever we have done. So that's one thing which has worked out pretty well for us.
Greg, I see you. Over to you. I know that we're running tight on time this morning, so I want to pass the floor back to you now.
I want to.
Guys, thank you very much.